Welcome back. Now, during October, growth in the SA REIT index outpaced that of bonds and equities. Coming in at 10.8, it's the strongest monthly gain registered in 4 years. So what's driving this momentum? Ian Anderson, head of listed property and portfolio manager and Merchant West Investments, joins us now with his analysis. Hi Ian, good to have you on Business Lunch. I think the obvious question is obviously, what's driving this? I mean, a fantastic month for October.
Yeah, I think it's not just that October was good. Since the formation of the Government of National Unity last year, REITs have really been on a tear. Last year's performance was 36%. This year we're up 26%. So it wasn't just about October. So what have we seen and what has been driving it? Well, bond yields are down 300 basis points. That's positive because it's a competing asset class, but also it's the benchmark against which many of these companies bench their cost of debt. So it means that debt costs are lowering. We've seen an improvement in property fundamentals. We've seen lower vacancy rates, higher market rentals. Companies are now starting to talk about distributable income growth and dividend growth, something we just haven't seen for the last 5 years since the COVID pandemic. So it's a combination of a number of factors. And then last year, these companies were trading at very steep discounts to net asset value, and those discounts have now also unwound as the sector has re-rated.
Ian, which property companies have seen great success stories? I mean, I was reading your media release and I was having a look and I just thought to myself, there's some really good stories here.
I mean, obviously the ones that I spoke about in the media release, Dipula, Fairvest, Vukile. Vukile in particular has done incredibly well. One of the few REITs that where the share price is actually above where it was trading pre-pandemic. So most REITs in South Africa are still trading at levels, or the share prices are still at levels that are well below their pre-pandemic highs. But Vukile is an exception to that rule. It's done incredibly well with its retail portfolio here in South Africa, but importantly has also done very well in its acquisitions in Spain and now more recently in Portugal. And then I think when you look at Dipula and Fairvest, they have specialized in neighborhood and convenience retail, mostly in rural areas, and that's been a very strong area for property fundamentals. There was almost no deviation from the longer term trend during the COVID pandemic, not like we saw in offices and large shopping malls. So it has been about the properties and about the locations.
You see, this is so interesting because, we do go back to COVID-19 and it was an absolute disaster for properties. At some point, we were all staying at home, things weren't working. But you've seen this gradual sort of climb. Is it, though, down to the Government of National Unity? Is there not something else here as well that, I always say, look at our markets, they're strong no matter what's going on politically?
I think the Government of National Unity encouraged investors to look beyond just the top 10 or 15 stocks on the JSE, and with most of those businesses having large offshore profits and revenues. So I think the Government of National Unity encouraged people to look beyond those businesses, but this has been about a lack of building, a lack of new supply. So that's not a great thing, and obviously we've seen it in the construction sector, the fact that there's just no profits there. So one negative in construction has been a very big positive for the property landlords because they're not competing with any new supply. And we have had incremental growth. Retailers like ShopRite and Boxer continue to look for more space. They're opening 80, 90 new stores a year. Those stores don't exist today, and so they try and find it in existing shopping centers, driving up demand for that space. As I said, the office sector is probably the only area of the market where we haven't seen a full recovery yet. It has happened in the Western Cape and Cape Town in particular, but in Gauteng and KZN, for example, the office vacancies are still very high. Rentals are still well below their pre-COVID levels. But in many of the other property types, we've already bounced back and we're trading at similar levels to where we were, late 2019, early 2020.
Yeah, Ian, not to look at the negative, because that's what we always do. We look at the one thing that's not kind of working. But let's kind of have a look at those office rentals and what's going on at the moment. Do you see sort of green shoots happening? Because people are not working from home anymore. People want face value. I mean, are you seeing things climbing?
Absolutely. And I mean, it's come through in almost all of the results. The big office landlords in South Africa, the likes of Redefine and Growth Point, they are definitely seeing an improvement in fundamentals. Yes, if you've signed a lease 10 years ago and it's been escalating at 7 or 8%, when you come to renew that lease, you're going to take a big negative reversion to bring it back to where market levels are. But leases that were signed 3 or 4 years ago, they've kept pace with market. And so there isn't the same quantum of negative reversions, and they are filling vacant space. And that's important. So yes, there is demand for space. There's no new supply. And I think, if anything, rentals have stabilized. I'm not forecasting a huge recovery in the office market, but it's certainly looking a lot more attractive today than it was 2 or 3 years ago.
Right. Something else I was looking at is your chart book for October. Yeah. Take us through your highlights. I found it quite interesting.
So I mean, the chart that I always look at, and the one that I think is the most important for investors, is the growth in dividends. So distribution growth rolling 12 months. And if you look at the chart, and it's done on a quarterly basis, and pretty much for the last 8 or 9 quarters, up until the June quarter of 2025, there was no growth or negative growth. And that's probably why the sector was under so much pressure, or stayed under so much pressure. However, since the June quarter, and with these improving property fundamentals, lower borrowing costs, we've started to see the dividend growth move into positive territory. And in fact, in the last quarter, the quarter to the end of September, growth in dividends across the sector was over 10%.
Sure.
Now, that's not, and you've got a dividend yield of 8%, growing at 10%. That's a very attractive proposition, especially when you compare it to the bond market, where yields today are 9% with no growth in income.
Sure. So I think it's good news for a Tuesday. Ian Anderson, thank you so much. It's been great to chat to you, and I look forward to chatting to you again in the future when we have a look at those REITs once again. Thank you, Ian. That was Ian Anderson, Head of Listed Property and Portfolio Manager at Merchant West Investments.